In the Bitcoin markets, Tether-based offenses are considered especially heinous. In the media, the dedicated detectives who investigate these vicious market manipulations are members of an elite squad known as Texas Academics. These are their stories. Okay, enough fooling around. What's going on, everybody? It is your boy, Crypto Bobby. I hope you are having a great day, great night, wherever you're watching or listening in from. And yup, no more fooling around. We're here to talk about the news that happened all over mainstream media today, which is that one single whale, yes, one single entity, one single person, he, she, an alien, I don't really know, but according to an academic study from John M. Griffin and Amin Shams that came out or was kind of republished or was updated on October 28th of 2019. The study was widely distributed today amongst really the top news sources, the most respected news stories or sources in the country, if not some of the most respected news sources in the world, with the Wall Street Journal, Bloomberg, and others talking about Bitcoin and how one single whale was responsible for basically the entire bull run in 2017. And it is some interesting stuff. We'll put it at that. It is popcorn material and or tinfoil hat porn for those who enjoy the Bitfinex Tether conspiracy theories, whether or not they have any justification. Who knows? Remains to be seen. I know a lot of people are on that train as of late, but we'll definitely dive into all of that and more. If you are new to the channel by any chance, make sure to hit that subscribe button, smash the like button, because, hey, why the hell not? And we'll hop into it. So if you want to read the entire paper, it is 119 pages. There's a lot to read. If you have some light reading, if you want to put down your encyclopedia and take a look at it, I will link to it. There's a place you can go and download it and or preview the PDF for free, so you can definitely take a look at it if you'd like. I will also link to the article in Bloomberg as well as the Wall Street Journal as well. So the title of the paper is Bitcoin Really Untethered? And this is by, again, John M. Griffin and Amin Shams. And the abstract of the paper says this. This paper investigates whether Tether, a digital currency pegged to the US dollar, influenced Bitcoin and other cryptocurrency prices during the 2017 boom. Using algorithms to analyze blockchain data, we find that purchases with Tether are timed following market downturns and result in sizable increases in Bitcoin prices. The flow is attributable to one entity, clusters below round prices, induces asymmetric autocorrelations in Bitcoin, and suggests insufficient Tether reserves before month ends. Rather than demand from cash investors, these patterns are most consistent with supply-based hypothesis of unbacked digital money inflating cryptocurrency prices. So what are they saying at a very high level? Well, they're saying that, number one, Tether is not backed by dollars. And in the case of Tether being backed by $1.74 or so, thanks to crypto capital, maybe not, maybe a little bit more than it's 74 cents now because of the Leo token sale. But basically they say that, number one, that Tether is magic internet money that is created to pump the price of Bitcoin. And number two, they're also going out and saying that not only is it magic internet money that is going out to pump the price of Bitcoin and is not actually backed by anything, but that it is also one specific entity that is attributable to this market movement, which is pretty crazy. You obviously, everybody, a lot of people like to talk about market manipulation in the crypto space, and it's especially prevalent because there is no proper way to value Bitcoin. There is no proper way to value these crypto assets. So it makes for very attractive discussions around the manipulation of these assets, especially with the light to no regulation of some of the most prominent crypto exchanges where price discovery does occur. So obviously manipulation is something that is talked about a lot, but I don't think anyone has really seriously suggested that one entity was behind the 2017 run-up. That's a pretty strong claim, and that's why this is getting a lot of press and came out again. You could see in the Wall Street Journal, large Bitcoin player manipulated price sharply higher, study says. Stablecoin Tether, Bitfinex exchange reportedly used to drive up cryptocurrencies prices in 2017, 2018. Bloomberg comes out with, in their markets piece from Matt Leasing and Matt Robinson. And Matt Leasing is one of the, I would say, more well-respected financial journalists, specifically at Bloomberg, but also nationally. And a lot of people like Leasing's work. And the title of their piece was Lone Bitcoin Whale Likely Fueled 2017 Price Surge, study says. Goes on to talk about the Texas academic that not only said last year, and this was not just a new study, this is something that happened last year, and then they came out and kind of re-upped, doubled down, but they came out to say, Bloomberg says, a Texas academic created a stir last year, referring to the same folks, by alleging that Bitcoin's astronomical surge in 2017 was probably triggered by manipulation. Now they're doubling down with a striking new claim that a single market whale was likely behind the misconduct, seemingly with the power to move prices at will. And what do I think about all of this? And there's a lot to, there's certainly a lot to take in. There's a lot to discuss around here. I think that for the most part, when you are looking at this, there is undoubtedly shady stuff that occurs in the Bitcoin marketplace. There's undoubtedly shady things that happen in the cryptocurrency landscape with these exchanges. There is a lot that occurs on a consistent basis because of the light regulation in the blockchain and crypto space. There is light regulation. And even taking a step back, a lot of shady stuff happens in the regular financial markets, and there is incredible regulation there, very tight regulation now. So things still happen regardless, but because of the nascent industry, things are not always as they seem, and especially in an industry where you can't accurately value these assets. There's just whatever indicator you want to do, if it's using some type of technical analysis, if it's using some type of on-chain methodology, if it's using, there is no properly popular accepted methodology to value Bitcoin and to value a lot of these other crypto assets. So naturally, manipulation, the subject of manipulation occurs on down moves, on up moves, etc. But is one person responsible for moving the entire market? Is it all one person's doing? Did they do all this work on their own? And to me, that feels like an outrageous claim. 2017 was, I'm sure there was some fuckery with Bitfinex. I'm sure there was some shady stuff that went on with Tether. I'm sure things happened across the board that were very shady. But when you look at the mania that was 2017, if you were around, I'm sure you were around in 2017, early 2018, if you were around in that time period, there was such a ridiculous influx of new money coming into the space, and it was so heavily retail driven. Could one big entity likely pop up and prop up a massive move? Absolutely. Things could definitely be influenced by one large entity, but is that going to discount the fact that there were thousands and thousands of Uber drivers on end that were interested in Bitcoin and crypto assets across the board? No, absolutely not. Is that discounting the fact that the ICO boom fueled a massive demand for Ether across the board, and people were taking money, throwing it into Ether, flipping that into tokens, making 5, 10, 15, 20x, taking that 20x that they just made, putting that back into new tokens, putting that back into new tokens? It was a wild time, and a lot of things were certainly unadvisable, and things didn't always go as planned, but to feel like and to insinuate that was one specific entity because of the way in which you looked at the printing of Tether at the specific time, I think that is a not the smartest thing in the planet. Interestingly enough, and shout out to Larry Cermak from The Block for doing this, because again, this paper is 119 pages. Granted, there's a lot of numbers and charts and things like that, but that's a lot of content. And this came out pretty recently. Larry went ahead and read the entire thing. So he had a mini tweet storm, but I think worth the discussion. So Larry says this: I have now read the entire updated paper by Griffin and Shams, and I have to say that it's still riddled with errors and fundamental misunderstandings about how the stablecoin deposits and redemptions work. Stablecoin deposits and redemptions referring to Tether. There is still no proof that there is market manipulation. If this paper actually ends up being published by the Journal of Finance, one of the most prestigious journals in finance, I will lose quite a bit of respect for peer-reviewed work in finance. It should also be reviewed by someone who actually understands these dynamics. If I have time tomorrow and there's interest, I might do a detailed thread about all the problems with this paper. I think there's going to be interest. Tether just seems like a clear scapegoat in this case because it was virtually the only stablecoin in late 2017, early 2018, and it operated in an opaque fashion. And so taking a step back and looking at what Larry said here, I think one of the interesting things about this paper and then just like a lot of the components, I think even just the media in general is operating within the blockchain or crypto industry. And I am by no means an expert. Absolutely no means an expert. I've said that from day one, and I will continue to not be an expert ever. But when you are somebody that portrays yourself as an expert in this field or kind of puts forward very specific facts about things, you actually should be an expert. And you could be a fantastic researcher and you could be, very in-depth in the, oversight that you do. But if you're not actively participating within this industry, sometimes I think it makes it difficult to understand what's going on behind the scenes. And I think that might be part of the problem with this, with this paper. When you look at the participants within this study or this research and some of the helpful comments here, anonymous referees, associate editors, there's some government agencies, things like that. But I don't see anyone necessarily who is contributing to this from within the industry. And I'd be curious, and I would like to hear too, would be curious if there was actually any type of input from actual crypto traders from this, because I do think, when you're on the outside looking in, it is a very different scenario from actually being on the inside of the industry. And I also do think that there is a very big gap of understanding between what happens and kind of the quote unquote value of Tether and some of these other stable coins, but Tether specifically between the US and basically between the US and Europe, and then versus China and Asia, because I do think that there seems to me, and from a lot of the people I've spoken to, the people in Asia have a very different perspective on Tether, and they seem to actually find it a lot more useful and have a more positive opinion on it than many people within the US and just kind of our part of the world. So, and again, I don't think that Tether has been guilt-free at all. I don't think Bitfinex has ever been, guilt-free at all. I don't think a lot of cryptocurrency exchanges are guilt-free. And I think Bitfinex and Tether obviously have a bad rap when it comes down to things. But looking at this from the perspective of pointing to one entity manipulating the market enough to actually cause the ridiculously incredible bubble where you saw the crypto market as a whole over $800 billion, I think that is outrageous and ludicrous and just silly. And the fact that journalistic, these are journalistic institutions. That's the Wall Street Journal. It is Bloomberg. And the fact that they're publishing this type of information is kind of crazy. And I think it's a little bit unfortunate too to think about how easily it is to go ahead and to, I don't want to say this is FUD because it doesn't really make a difference. The price of Bitcoin's up today, but it's just a lot of negative connotations around Bitcoin and the crypto markets as a whole. And I think it's unfortunate to see this type of, I think, relatively unproven research. This is a research paper, but relatively unproven research that just gets massive mainstream pickup. So it's a little bit unfortunate in that. I don't expect anything different at this point in time. It's the type of thing that's just, clickbait porn for the people that either do not like Bitcoin or the Tether truthers or whoever it might be, but I think worth talking about in general. Would love to hear your thoughts in the YouTube comments if you're listening on YouTube. Do you think one entity manipulated the market in 2017 and 2018 to cause the run-up? Was it multiple entities? Do you think anybody manipulated the market? Do you think it was just a mania, some combination of all of it? If you're listening on the podcast, what are your thoughts there as well? Would love to hear what you're thinking, and make sure to, again, hit that thumbs up button, like the video. Crypto Bobby signing out. Peace.